Good morning. It's Jeffrey Christian of CPM Group. It's about 10:35, 10:40 here in New York on Friday, the 25th of April. I want to talk a little bit about Russian central bank gold policies, what they've been doing. They bought a lot in February. They sold a lot in March. That has an effect on the overall totals that you'll see for official transactions. Something to pay attention to. And talk about citing facts. I'll go through some facts in the markets and some examples, not only in the market, but in politics of things that are not exactly true, misrepresentations, disinformation, things like that. Then I'll go into our market update. We will be moving toward our open forum for investor clients May 8th, and I'll talk a little bit about that as well. These are Russia's central bank gold policies. On the left-hand side are the monthly purchases and sales. You can kind of not really see it, but in February, there was about 3.2 million ounces that were purchased by the Central Bank of Russia, mostly from domestic sources. And then there was about 3.2 million ounces sold in March as well. Russian central bank has been using gold purchases and sales, been using their sales to finance their war effort as well as their overall government. The government has lost a lot in terms of its revenues due to various sanctions and export restrictions and things like that. So we saw the figures for total central banks rise very sharply in February. And when they come out for March, they should be expected to be significantly lower, because this Russian transactions are sort of masking what all the other central banks are doing. This is central banks, the People's Bank of China, just to show you that the People's Bank of China is not rushing to buy large volumes of gold at record prices. Neither are other central banks. You'll hear people saying that, but it hasn't really been the case. Now, this is only through February. We don't have the March data for the PBOC and other central banks yet. We expect that to come perhaps as early as next week. If you look at total central banks, they bought 40% less gold by volume last year than they had in 2023. And I ran through this a few weeks ago in one of our videos. Central banks tend to think in terms of dollars of how many dollars they're going to spend buying gold and what percentage of the dollar value of their monetary reserves are in gold. So as the gold price has risen sharply, they're buying less by volume. That's important because you have heard and will continue to hear a lot of promoters talking about how central banks are buying gold hand over fist, and they'll continue to buy gold hand over fist. They're racing to replace the dollar with gold, none of which is actually accurate. And I hate to say it, but misinformation and disinformation is very important. It's the topic of this video. I was at a conference last night, and there was someone at this conference who was working on AI-based work in pharmaceuticals. And we were talking, he said, so he was asking me about AI's applications in commodities markets. And I said, the commodities markets are so asymmetrical. There's so much bad information that circulates there, and there's such a paucity of good information that broadly is distributed. It's mostly held by large participants in the markets, a handful of large participants in the market. So AI collects information that's out there in the metasphere, and it winds up sucking up a lot of bad information, and it bases its output on that bad information. So it's really not useful across commodities research, at least at this point. It needs to be improved. And you're definitely seeing that in central bank gold. So this is annual data through 2025. our projection for 2025, which is for some slight increase in central bank gold purchases following that 40% decline in 2024. These are the monthly data. And here you can see how that Russian purchase, this is through February, you can see how that Russian purchase of 3.2 million ounces caused it to look like central banks were rushing into purchasing gold. If you take out that 3.2 million ounces, you have about 1.2 million ounces of gold that was bought by all the other central banks, which was somewhat slightly larger than the 900,000 ounces that other central banks were selling in February. But the inclusion of that Russian gold, which you really need to do, makes it look like central banks were rushing in. Russia sold 3.2 million ounces again in March, about the same amount, slightly less than what they had bought in February. So when the March data gets all cobbled together, we may see information that shows a large decline in central bank purchases in March, and that could spook some people in the gold market. Other true believers won't believe it. So I want to go into citing facts, and it's a little bit difficult. I will start by saying we will be having one of our open Q&A sessions for our clients May 8th, so a couple weeks from yesterday, Thursday in the morning in Eastern Daylight Times, not Standard Time. It's a thing we don't necessarily have a formal presentation. We invite our clients to send in questions either ahead of time or to ask the questions during the session. These things tend to last an hour or two, usually about 90 minutes or so. They're usually far more questions than we have time to answer in that time zone. And we're trying to figure out how maybe to address that for our clients going on. This is open to all CPM Group clients, including retail investor program clients. And, there are several topics that are important there. As I said, central banks bought 40% less gold in 2024. They're not racing to buy it. Silver supplies exceed fabrication demand. Silver market is amply supplied. There are more than 5 billion ounces of refined silver, mostly held by investors around the world, mostly in North America and the Indian subcontinent, but really around the world. So the silver market is well supplied. There's no deficit. Investors are buying more silver, but it's not the hundreds of millions of ounces that you hear from other people. And other investors have been selling silver over the past 2 years, in part taking advantage of higher silver prices that have been in the $28 to $35 range, as opposed to, say, $20 to $26 range that you saw a year or two ago. Platinum market's not in a deficit, and it hasn't not been for many years. And palladium is losing volumes in its largest market, which is auto catalysts, with EVs now taking about 17% of the light-duty vehicles being sold in the world in 2024. Now, a lot of those EVs are being sold, half of them are being sold in China, where the cars are smaller and the catalysts are smaller, but it is having an impact on the market. Some of the things that you should know, about the markets. Now, I want to point out that when I discuss other people, there's a difference between insults and describing behavior. When Mr. Trump says that a senator from Maryland who goes all the way to El Salvador to see if one of the residents of Maryland who's been illegally and improperly shipped off to a prison camp in El Salvador by the U.S. government goes to see if he's okay, and when Trump calls him fake, that's an insult. When someone is trying to do something good and Trump calls him a loser, that's an insult. when various business leaders who have made their own companies or run large companies successfully say that Trump's tariffs and trade and other policies are detrimental to the economy, and Trump says, well, they're all bad business people, that's an insult. We try not to insult people. However, there are a lot of liars and fakers and snake oil salesmen in the precious metals markets. And we want to point out misinformation and disinformation, especially when it is being consciously undertaken and circulated in the market in order to deceive market participants. One of the things that CPM Group does and has been known for 40 years next month, our 40th anniversary is at the end of May, is that we separate the wheat from the chaff. And we are able to tell our clients, don't listen to that because it's not true. Listen to this because it's true. And if we call people snake oil salesmen or carnival barkers, because that's how they behave. We're not insulting people, we're defining their behavior. You might want to nitpick that, nitpick it on your own. Don't bother me. Here's a nitpick. This chart is from the Wall Street Journal, I believe last week, and it shows that federal spending has risen $150 billion more in the first 80 days of the Trump administration compared to the same period in 2024. In other words, his efforts to reduce deficit spending have not actually worked. A couple of weeks ago, Elon Musk actually told the cabinet in a public hearing that it wouldn't be $2 trillion in cuts to government spending that his Doge would-be department is doing. He actually said it probably would be closer to 150 billion. And it probably won't even be that, because as you can see, in the first 80 days, they've been spending money like drunken sailors. The Trump administration structured continuing resolution, as an indication of that, passed in early April, has $5.8 trillion of increased federal expenditures over the next 10 years, mostly tax reductions for corporations and high-income individuals. It has $40 billion in cuts. That suggests that when you start talking about people who are fakers, the U.S. administration is one of them. And you're finding that people around the world know that. There's another one. The administration keeps talking about how its trade discussions with the Chinese government are going very well. And the Chinese government keeps saying, as it did yesterday, we're not talking to the U.S. administration. We're not sure who they're talking to, but it's not the Chinese government. I think they're talking to themselves. Here's some interesting data that someone sent me this morning. These are 3 different presidents. They didn't have data for Biden, but 12.3 million deportations under Clinton, 8 years though. 10.3 million deportations under George W. Bush, 5.3 under Obama, all 8 years, 10 years, with 0 injunctions against what they were doing. Trump, in his first 80 days, has deported 100,000 people, and there have been 30 injunctions. There are right ways to do things and wrong ways to do things. I have been a proponent for cutting the U.S. budget since the early 1980s. I wrote a piece during the Occupy Wall Street period, 5 easy pieces, which people still ask me about, on ways to eliminate the federal deficit in a way that is not necessarily painful to most people. Maybe the top 0.5% and corporate people, but most people not. I'm all in favor of a surplus budget, and I know good ways to get there, as do many other people. But there are wrong ways to do things too. And unfortunately, we're pursuing the wrong ways right now. Now, this was the advertising. This was advertising that came out, I think, earlier this week from a perma-bull gold promoter, somebody who's been in the business for 35 years, he says. And he's been wrong for 35 years, and he says it. So the first sentence of his marketing was, for at least 35 years, the monetary system has been telling us that the current era is coming to an end. So you should buy gold, he said. And now he's saying, okay, I've been wrong for 35 years, but now it's happening. Yeah, that's one of the kinds of things to watch out for. Here's another one. Mining Weekly had an article that the World Platinum Investment Council had reported in a media release to Mining Weekly that the volume of digiplatinum that is being sold through the Royal Mint in United Kingdom, that the volume had increased 133% in the first quarter of 2025. Now, digiplatinum holdings at this week were 1,632 ounces. But you have to understand, and you can see here with the fine print, the Royal Mint counts the amount of platinum and gold and silver that it has in its digimetals accounts. That it counts the metal that's there, and it includes unsold stocks and ounces of digigold, digiplatinum, digisilver. But it's within it. Obviously, they don't want to have a lot of inventories that they haven't sold. They tend to buy as they have sales. But if they saw a 133% increase in the first quarter, that means there were 932 ounces added to 700 ounces that already were there. Which is interesting because you are talking about a platinum market that has had hundreds of thousands of ounces of annual surpluses of newly refined metal relative to fabrication demand for most of the last 4 decades. Now, hundreds of thousands over the last several years, down last year because of some supply constraints, but surpluses for like 40 of the last 47 years. So, yeah, it's great that the Royal Mint is offering fractional gold, silver, and platinum investments that they'll hold for investors if they want the British government to hold it. Actually, I think it's a Crown Corporation, slightly different from the British government or the UK government. It's great that they're offering this, but let's put it in perspective. It's 932 ounces of platinum. Turn our attention to the markets. Gold, as I was coming to record this at 10:38, was trading. The June contract was $3,293.80. It was off about $50 from yesterday's market. The price has been fluctuating sharply. It shot up to $3,502 earlier in the week. It came off sharply on Tuesday. It went back up it came off on Wednesday. It hit 3,500 on Tuesday, came off on Wednesday, went back up on Thursday, and today it's off again. Gold is trading at record levels, and whether it stays there or not is questionable. We had been saying that we thought the gold price would peak in the first 4 months of this year, come off slightly in the rest of the second quarter and the third quarter, and then rise further. That's predicated on our view that the economic and political problems that have been causing investors to move into gold continue, that investors back off a little bit in the middle part of this year, but with those problems continuing and possibly growing worse over the course of the year, by the fourth quarter or the last 4 months of this year, investors might be becoming more concerned and start buying more gold. Our expectation is still that that's going to happen. So we're thinking that we're getting close to a cyclical peak here. that the price might back off a little bit in the next several months, but that it's probably going to stay strong. And that is predicated on investment demand staying high, and that is predicated on political and economic and social problems staying bad and probably getting worse. And that seems to be the trend that we're going on. Now, there'll be periods of time when there's news, both on related to gold and related to the economic and political environment, that could cause investors to sell off. You saw that earlier this week when Trump backed away from his really ill-conceived tariff efforts briefly, as well as a few other things. And there were a couple court orders that went against the Trump administration, not just those 30 injunctions on deportations. And you saw the gold price come off. And as I said earlier, you have to wonder what's going to happen to investors' attitudes toward gold if the March central bank data comes out and it says, oh, central banks on a net basis sold 3 million ounces. And whoever promotes gold will say, but that was all the Russian sale. And if you take out the Russian sale, central banks actually were net buyers of some small amount of gold. Yeah, but you have to worry about what that kind of news on the gold market's fundamentals and on the macroeconomic and political fronts do to investors' attitudes toward gold. And so the bottom line is we expect gold prices to remain very volatile over the next several months as investors' psyches get whipped back and forth across markets. Silver is trading at $32.91 as we started recording this. It got up to about $33.50 yesterday. That had been our ultra short-term target. Our expectation is that the silver price, it's right in the middle of that range between, say, $32 and $35 right now. Our expectation is that silver prices will hold up very well. But the sell-off that we saw earlier in April should stand as a note of caution to investors about the volatility of silver, and the relative thinness of the market. As I said, we have seen investors selling. If the price gets back up to $34, $35 an ounce, we expect another wave of investor selling, of people who basically want to get out of the silver market. Some of them are transitioning into gold. Some of them are just taking payments. But we do think that the silver price, by and large, will stay between, say, $30 and $36 in the ultra near term, and possibly move higher over the next year or two. Platinum prices fell sharply also in early April. They came back and they're back to trading they really never moved. They've been trading in a range of 900 to 1,050 for the better part of a year. And our expectation is that they're going to continue to do that. So we think that we're right in the middle of it. Quite frankly, I wouldn't be surprised to see the platinum price rise a little bit more in the near term. And palladium, similarly, has been trading in a range with a longer term negative outlook for the palladium price, although we've argued that perhaps the range that we've been seeing since the beginning of 2024, that range of 900 to 1,100 really, may represent a long-term bottom for the palladium market. We don't necessarily see it rising sharply in the near term. There are trading opportunities on a short-term basis, but from a longer-term perspective, we don't see it going back to $1,800 or $2,000 the way it was 3-4 years ago. You can buy our gold yearbook at our website. We'll be releasing our silver yearbook on May 27th. You can pre-order it at our website. Our Platinum Group yearbook will come out in late July. As I said, and I'll repeat, We are we're having our second quarter open forum. Challenge your assumptions is what we've been calling it we've been doing this in various venues since around 2011 or so. Challenge your assumptions. If you have questions, hey, what about BRICS? One of the things that's been coming up all of a sudden is BRICS is replacing SWIFT. No, it's not. BRICS has said that their members should allow international fund transfers away from the SWIFT system, which is funny because everybody does that. There's no requirement to use the SWIFT system. It's used because it's fast, it's easy, it's well distributed, and it's secure. The occurrence of theft or loss in the SWIFT system is a mere fraction of the theft and loss in cryptocurrencies. It's extremely secure and easy to use, and that's why people use it. No one's required to use it. And the BRICS communique last October said, no, we see the IMF remaining as the center of international finance, and we see the SWIFT system as continuing to be the best way to transfer money across countries and within countries for the foreseeable future. And we support those, but we also want to diversify people's choices. People have different choices already. So that said, you'll find gold promoters talking about how the BRICS are destroying the SWIFT system and part of their move away from the dollar. It's all nonsense. But if you're our client, we can talk about that. You can send a note and say, talk to us more about why we shouldn't be worried about this or why we shouldn't think that this is actually even going to happen. And we'll be glad to talk about it on May 8th. In the meantime, you can go to our website, you can buy our reports, you can get all kinds of free reads and videos, you could see what else we can do for you. You can send us an email at info@cpmgroup.com and say, let's talk about ways that CPM Group can work for me. And we'll be doing that. In the meantime, have a good weekend. Take care of yourself. Take care of those around you. Try to do something good for the world. And we'll talk soon. And we'll probably be talking about critical thinking some more in the future. Take care.